Live from the financial capital of the world, broadcasting across the globe, this is WBBR New York, Bloomberg 1130.
This is Bloomberg Daybreak Asia for this Friday, May 12th in Hong Kong, Thursday, May 11th in New York. And coming up today,
U.S. inflation data suggests the Fed's tightening campaign may be finally having an effect.
The FDIC says larger banks will face billions of extra fees to replenish the agency's insurance fund.
And JD.com CEO exits after the Chinese internet retailer reports its slowest pace of growth on record.
Big Five debt ceiling summit moved to next week. Both sides say a good sign. Top officials from China and the U.S. have met in Vienna. Immigration goodbye Title 42, hello Title 8. I'm Ed Baxter with Global News.
Is Real Madrid setting up to make another run at Kylian Mbappe? I'm Dan Schwartzman. I'll have that story and more coming up in Bloomberg Sports.
That's all straight ahead on Bloomberg Daybreak Asia, on Bloomberg 1130 New York, Bloomberg 99.1 Washington, D.C., Bloomberg 106.1 Boston, Bloomberg 960 San Francisco, Sirius XM 119, and around the world on BloombergRadio.com and via the Bloomberg Business app.
Hi, everybody. Good morning from Hong Kong. I'm Brian Curtis, along with Rashad Salamat and Doug Krisner. Doug, it's time for the triple espresso to kick in. It's a Friday morning in Asia.
Yeah, and we'll have action underway in Tokyo, Sydney, and Seoul in about 2 hours from now. Kind of a mixed day for stocks in the States. We had weakness for the Dow and the S&P. NASDAQ comp popped. In terms of the eco data, weekly jobless claims showing a cooling in the labor market, and then when you look at the numbers on wholesale inflation, the figure came in below estimates. At the same time, some renewed concern about the health of those regional banks. Take a look at PacWest Bancorp. The company saying that deposits were down 9.5%. The stock was off about 23% today. In terms of yield, well, maybe you could say there was a bit of haven buying. On the shorter end of the curve, we have a 2-year now at 389, a 10-year at 338. Even with a decline in yields today, there was a rally in the dollar with the Bloomberg Dollar Spot Index picking up about 0.5%. More weakness in the price of crude oil with WTI down on worries over recession and a subsequent decline in oil demand. WTI was off 2.3% in New York to 70.87. We'll take another look at markets for you in about 15 minutes. Brian?
All right, thanks very much, Doug. Let's take a look at these top stories. The shares of big banks were weak today, and the FDIC said that larger lenders will face billions of extra fees to replenish the agency's insurance fund. The agency said that the institutions with more than $50 billion in assets would pay 95% of the fees, and those with less than $5 billion wouldn't have to pay at all. This comes after the FDIC made the decision back in March to backstop uninsured depositors at the failed Silicon Valley Bank and Signature Bank. J.P. Morgan Chase CEO Jamie Dimon says it's time for the regulators to help put an end to the turmoil in the banking industry.
We've had uncertain policy on mergers, this First Horizon deal. I think we have to assume there'll be a little bit more. So, whatever the FDIC, the OCC, the Federal Reserve, whatever they need to do to make it better, they should do. Be thoughtful, be very forward-looking, not be surprised constantly. Because some of these things have been known about for quite a while.
Dimon said that regulators are likely to overreact in their response to the regional bank turmoil with more rules and more requirements. But he also advocated for a probe into the short selling of bank stocks. Dimon said that those involved should be punished to the fullest extent of the law.
Well, in the U.S., the day's economic news was a bit on the soft side. We begin with first-time jobless claims reaching the highest level since October 2021. And at the same time today, producer prices in the month of March dropping by the most since the beginning of the pandemic. Now, these data points suggest the Fed's policy tightening campaign may be having an effect on inflation. Even so, the head of the Minneapolis Fed, Neil Kashkari, is saying price pressures remain too hot.
Inflation has come down, but it's still well above our 2% target. We have seen some softening in wage growth nationally, but it's very mixed.
That is Neil Kashkari. He went on to say he sees no evidence yet of slowing on the services side of the American economy, and he thinks that tight monetary policy may be needed for an extended time. Brian?
And Doug, we talked earlier about the rebound in Chinese shares listed in New York. The NASDAQ Golden Dragon China Index was up 3.8%, and part of the reason was this one. JD.com's CEO is leaving the company after only about a year in the post. Bloomberg's Bonnie Au has the story from Hong Kong.
CEO Xu Lei will hand over the reins to CFO Sandy Xu next month. Xu Lei has been at the company for more than a decade, but only took over the CEO job in April of last year. The management reshuffle was announced after JD reported its latest results. Revenue grew 1.4% to $35 billion. That beat projections, but it was the slowest ever pace of expansion. The firm has been struggling with competition from Pinduoduo and ByteDance. Analysts say the personnel change suggests a shift in focus towards profitability. JD's ADRs in New York rose 7.2%. In Hong Kong, I'm Bonnie Au, Bloomberg Daybreak Asia.
And today in the States, the NASDAQ Golden Dragon China Index was up about 3.8% on the day. We move next to SoftBank. The company has lost money in its Vision Fund again, despite that rebound that we've been seeing lately in tech stocks. Bloomberg's Joanne Wong has more from Hong Kong.
The Vision Fund unit lost 297.5 billion yen, or $2 billion, in the 3 months ending March. A year ago, it suffered an even bigger loss of 2.2 trillion yen. The investment fund lost a record 4.3 trillion yen for the full fiscal year. To many, the results may seem surprising. That's because technology valuations around the world have largely rebounded this year. CFO Yoshimitsu Goto acknowledged the past year has been rough, reflecting that SoftBank was forced to mark down the valuations of almost 350 companies. In Hong Kong, I'm Joanne Wong, Bloomberg Daybreak Asia.
The Bank of England raised its benchmark lending rate to the highest level since 2008. Governor Andrew Bailey said further increases may be needed to stay the course in the fight to slow inflation.
And it's our job to get it all the way down to the 2% target and have it stay there. And this is why today we've increased bank rate by 0.25 percentage points to 4.5%. Low and stable inflation is the foundation of a healthy economy. And we have to stay the course to make sure inflation falls all the way back to the 2% target.
Officials led by Bailey also delivered the biggest upgrade to growth projections since the BOE gained independence back in 1997. The BOE said that the real economy will be 2.25% bigger by the middle of 2026. The central bank also no longer sees a recession in the forecast. I'm Brian Curtis, along with Doug Krisner and Rashad Salamat. He will join us in a few moments. So, Doug, I'll tell you, from the bear standpoint, some might think that the jobs market has finally begun to crack. It's probably too early to really make that call, but it did appear to dent optimism from the slight drop in inflation that we had earlier.
Yes, you're absolutely right about that. And Bloomberg Economics was analyzing those warn notices. They've done so going back to the early part of the year, and now we're beginning to see a correlation with where the large number of layoffs occurred and the rise in the first-time jobless claims. So I think you're right, Brian. We may be finally seeing some kind of softening in the labor market, and to the point about Fed policy, maybe it would give a little bit more flexibility in terms of pausing and just kind of holding steady for a while longer.
Yeah, and from the bear standpoint, they see this market leadership as really narrow. And another example today, the NASDAQ was up and just about everything else was down. And the bears would say if you strip out the top 10 companies, well, the performance, has been weak. But of course, the bulls would say if you strip out the banks, well, the performance would look much better. But the reality is you can't strip things out.
Yeah, and Jamie Dimon, the head of J.P. Morgan Chase, was telling us today that it's time really to get this banking problem solved. And he does expect that we could see a little bit more stress building in some of these regionals. He pointed to the problem in the commercial real estate market and basically speculated that we could see a couple of more failures.
Yeah, and it was a tough day, actually, for regional banks. You mentioned PacWest and the basic general performance. The regional bank ETF KRE was down 2.5% on a day when, the tape wasn't all that bad. The S&P 500 was only down 0.2%. Now it's time for global news. Well, the U.S. debt ceiling summit set for tomorrow has been moved to next week. So is that good news or bad news? Well, let's turn to Ed Baxter, who's in the 960 newsroom in San Francisco. Ed?
Yeah, so that is the question. You're right, Brian. Actually being seen as a positive sign. Bloomberg's Kaylee Long said that her statement seemed to align.
Early next week, for the Big Five, the president and these 4 congressional leaders, they're not going to sit down in a room together again for several days. That is what has been delayed. However, their staffs are going to continue to talk as they have been over the last 2 days. And Speaker McCarthy saying that postponing does not mean that these talks have fallen apart. In fact, he said that they all agreed it would be more productive.
Yeah, Senate Majority Leader Chuck Schumer saying that some progress has been made. And Bloomberg's Wendy Benjaminson says the staffs can work through issues without what the Big Five feel they need to spend.
The most promising thing we've seen today, and you were referring to spin earlier, but if all sides agree on the spin, then it actually might be true. We might be able to hold our breath just a little less tight and know that this might be coming to an end.
Now, both sides also agree that there will be no temporary fix. So, early next week for the Big Five. By the way, Donald Trump was asked about the ceiling debate last night on CNN.
Up there, congressmen, senators, if they don't give you massive cuts, you're going to have to do a default.
Democrats are responding to the interview last night saying Trump is not even a serious candidate. Senator Josh Hawley has thrown China into the mix in the debt ceiling debate, saying China's a main driver in the U.S. debt.
We ought to impose tariffs on China until we get our trade into balance and we give our manufacturers and our workers an even playing field.
He says it's time to get serious. China cheats on trade, he says, without end, says they shouldn't be allowed to do that. Top officials from China and the U.S. have met in Vienna over the past 2 days. Foreign Minister Wang Yi and U.S. National Security Advisor Jake Sullivan with what the White House calls substantive and constructive meetings, in what could be a sign that the sides are working to ease some strain. U.S. Homeland Security Secretary says that it is prepared for the end of Title 42 immigration controls at the end of the day. Secretary Alejandro Mayorkas saying there'll be new policy. It is called Title 8.
The new rule, finalized yesterday, presumes that those who do not use lawful pathways to enter the United States are ineligible for asylum. It allows us, the United States, to remove individuals who do not establish a reasonable fear of persecution.
Mayorkas says even a bit tougher than Title 42, but House Speaker Kevin McCarthy says damage has already been done.
11,000 people came across yesterday. Set a new record. 4.5 million have come across since President Biden has taken office. When he's lifted the actions of the last administration, an administration before that.
Now, Homeland Security says that issue will be enforced and taken care of. Global news powered by more than 2,700 journalists and analysts in over 120 countries in San Francisco. I'm Ed Baxter, and this is Bloomberg.
This is Bloomberg Daybreak Asia. I'm Brian Curtis in Hong Kong, along with Rashad Salamat. And we say good morning to our guest, Francis Stacy, Director of Strategy at Optimal Capital Advisors, with us in our New York studios. So, Francis, is this a sign that the job market is about to crack?
Wait, ask me that question again.
Yeah, okay. Is the job market cracking?
Yes, I think the job market is cracking. I think the internals would point to that. And, sometimes when we're seeing a lot of these jobs added, and of course we had those revisions lower, it's because some of the gig economy has to be added now as employees, and there's some internal things like that. But no, I do see it cracking. And, even the continuing claims, although they haven't skyrocketed yet, they are, 45% off of the low.
Absolutely, Francis. And what we did see in the jobs report was the main beneficiaries of job creation were healthcare and education. Now, these are not cyclical, so one should really look at the rest of the jobs market, and you could see it certain, and also, of course, added to that, the revisions you just mentioned.
Yeah, I mean, it's flowing very, very slowly, but you're seeing people take on secondary jobs. You're seeing, people start to have to take on, the temporary jobs are sort of falling apart in the background and things like that. So you're starting to see these very, very early indicators that it is actually softening.
Yeah, I said earlier when I was chatting with Doug that, you don't get to strip things out. But of course you do when you're in the stock market. You can make your targets and make your picks. So if you were long for the first part of this year and short the banking sector, you'd be smiling all the way to the bank.
Yes, indeed. It's really interesting because with the Fed conversation, tech was hit very heavily because it was the rates and it was the tightening cycle conversation, and obviously that doesn't help tech. And now it's rolling over into an economic situation. And what's fascinating is to look at tech as sort of a flight to safety because of balance sheet strength. I don't think it's going to, continue to be elevated because I think there's a lot of demand destruction going on in the background that is not yet visible. And I think that that's going to be attendant to the credit cycle, which is going to affect demand drastically. And we don't see that in the background yet, but it is just really interesting that now that we've had a lot of tightening with interest rates, we now see tightening in consumer credit and really credit across the board. And we haven't had that next shoe drop. So we just see these strong balance sheets.
So where do you see that demand destruction, if not in retail sales or some of the obvious places?
Well, what I see is that this is mechanically what occurs with every one of these credit events. And, you take the yield curve inversion, and that always, with the exception of once, leads to recession. And the reason is because it preempts this credit situation, because what happens is when you have an expansionary period, and of course historically expansionary, like what occurred with both fiscal and monetary policy during COVID, and then you start to drain liquidity out of the system, which the Fed is very committed to doing. You can get rid of the liquidity, but you cannot get rid of the debt. And what happens is then the yield curve starts to re-steepen. At the time that it starts to re-steepen is when you have credit spreads widen, and then of course you have an attendant credit situation. And it's anyone's guess. We're over-leveraged in so many areas, but commercial real estate is going to be a big problem. Corporate debt's going to be a big problem. And so we're just sort of in this calm before the storm.